Bazaar Morning Call. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, folks. Welcome to the CNBC-TV18 Motilal Oswal studio right here in Mumbai. I'm Sonia, and with me is Surbi and Nigel. We begin a brand new day of trade. But guess what? It is the end of the week. It's our favorite day, folks, isn't it?
Absolutely.
Thank God it's Friday. Thank God it's Friday. But I don't think the bulls can say that this morning because the cues that we have as we wake up to trade are negative. There was a steep sell-off across the global markets. The Dow was down almost 600 points, 550 points to be precise. The SGX Nifty is a dark shade of red. So whatever we gained in the last many days, of course, yesterday was a weak session, but today as well looks like it's not going to be pretty at all, at least at the start. Now, what happened overnight across the globe is that banks sold off in the US, particularly one bank, SVB Financial, which is the Silicon Valley Bank Group. That stock lost 60% after it announced plans to raise $2 billion in order to offset losses from its bond sale. So that seems to be the fear now, that if interest rates move higher, if consumers are unable to pay, then those losses have to be offset and the burden will fall on the banks. And that's what's happened across the US banks, actually. The fear of borrowers defaulting is something that has caused, this collapse overnight. Now, there's a jobs report later this evening, and all eyes are going to be on that. The expectations are that the payrolls will not rise much. The estimate is around 220,000. It pales in comparison to that big rise that we saw in the month of January, 517,000. But a couple of things to remember. A strong jobs report, if it comes through, will be bad for the stock market for sure. Because that would mean that the central bank will continue its focus on strengthening of the labor market as a justification for rate increases. So perhaps more rate increases towards the end of the month at the 22nd March policy. So those are a couple of things to watch out for. But the mood is sour, not just in the equity markets, even in commodities. Brent is under pressure. There's a fall that we've seen across the cryptocurrency universe as well. So we start on the back foot this morning. The levels to watch, I think the 200-day moving average of 17,414 is something where the market has taken support. Does that get taken out today? Only time will tell. But one thing's for sure, that the ceiling of the market is somewhere around the 17,800 level. That seems to be a bit of a resistance, at least for now. But the going is not looking good, especially within financials. And, generally there is this kind of a fear psychosis that starts. Once the banks start to fall, then there's a sentiment downturn and it takes everything with it. I don't know if it'll be that kind of a day today, but the start is looking quite weak.
Oh, yes, absolutely, Sonia. I think, even for me, today is going to be a classic tussle between the bulls and the bears, with the bears definitely having the advantage as we, kickstart the innings, we kickstart the day. You've already illustrated some of the factors. I'll just point out one more data point, and that is the jobless claims report. The big one we'll get later tonight. That's the non-farm payrolls data. But the jobless claims was actually good from a bull's point of view. And why? Because there were more jobless claims than what the estimate was. The estimate was 195. The actual number was around 211. It was also higher than the previous month's number. More jobless claims, weak labor market, and you go back to the same sort of tape saying, will the Federal Reserve go a little easy on that interest rate pedal or not? So yields pulled back, the dollar pulled back to an extent. So that's something that's aiding the bulls. But what's aiding the bears is the point that, Sonia, you mentioned, and I think that really brings back some very eerie memories. just reading those headlines again, I don't want to say it, but, you do get thrown back to that 2008, 2009 era. Look at SVB Financial. This is obviously, a bank that caters a lot to the startup space, to a lot of these startups in Silicon Valley. They sold off almost all the securities in the available for sale portfolio, and that was almost $21 billion. Despite that, now they're saying they have to raise over $2 billion in equity. And that's telling you something. What was the rationale? I was trying to find the rationale for it. Nothing very clear. It just said that, some trading losses and because their clients have suffered because of high interest rates. What it's telling you is that obviously this whole rise in yields cannot be taken lightly. It's not that easy to wish away. And that really brings us back to, home over here. Now, how much of this did our market preempt yesterday, right? We were discussing this, Nigel and I, because we closed at the lowest point of the day. We could not hold on to the previous day's lows also. And there was a lot of momentum on the downside. So how much have we already sort of, priced in? How much have we reacted to? And the big question for me is, are there any maverick bulls out there who will want to buy the dip today, or whether they'll want to just wait it out, let this non-farm payrolls report get out of the way, and then take a fresh call come Monday morning? I think that's going to be the critical question, whether this dip gets bought like we saw Nigel earlier in the week. But I don't know, are there any Braveheart bulls out there? I'm not too sure.
Well, today is going to be a big Friday. And a few factors out there. You'll mention the jobs report. That's very important. The SVB reaction out there, was it an overreaction? Because the size of the bank is much smaller than the larger names, and it cost more than $50 billion of, banks' market capitalization to get wiped off. And the liability side as well of SVB is very different from all these other banks, in terms of deposits, in terms of the rates that they were given. So was an overreaction on the US banks seen overnight? If that's the case, we'll see a bit of a bounce today. So let's see whether or not that plays out. And the weekly expiry played out for the Nifty, and that's one of the factors why the Nifty ended virtually at the low point of the day. So we are better prepared in that sense for an overnight shock, because we were down close to around 170 points, close to around 1% or thereabouts. And what was heartening yesterday was the breadth of the market. That's the broader markets, the mid caps as well as the small cap index. On a day when the Nifty is down 1%, you'll expect the mid and small caps to fall more. But those indices were down only around 0.5%. So there is select stocks that are seeing buying as well. For me, that was heartening. A couple of other asset classes, the dollar index was at around 105.5. That's cooled down to around 105, closer to around 105. So that's positive from an emerging market perspective. Brent crude prices as well from around $86. It's cooled down to around 81.5. Yes, it's because of recession fears, but Brent cooling off is normally a positive for the Indian markets perspective. And the FI as well, they had covered some part of their short positions, but yesterday they added close to 20,000 short contracts. The short positioning moves back up to around 80%. And we normally look at their long and short positions. In the last few days, it had come down to around 70,000 contracts. Now it's back over 1 lakh contracts. That's the total number of short contracts. And from there, you deduct the long contracts. So around 1.03 lakh contracts is what they have on the short side. Remember, when it goes to around 1.1, 1.2, then in fact, we do see a bit of a short covering bounce that plays out. On the option side, 17,700 call, that's getting written very aggressively, telling you that the bears believe 17,800 is not coming in the near term. However, at around 17,600 put, there were some signs of writing out there. So that's something that the bulls will like to look at and look at defending lower levels. What are the lower levels? The Nifty, the 200 DMA comes up for you around 17,430. That's taking into account yesterday's close as well. So that's the rough level that you should be looking at. And the Nifty bank, well, 300 points lower, you have the 20 DMA. So maybe some defense of that mark. Those are the two levels you like to look at. If the Nifty bank can defend the 20 DMA, then the bulls will be in with a bit of a chance. The start is on the back foot. First star low is crucial to track. And let's see whether or not we get a bit of a bounce from there. I think by the end of today, if we get both those two levels up for you on the screen, the Nifty and the Nifty bank can defend the 20 and 200 DMA. The bulls will feel very happy.
Okay, let's see. It seems to be a long Friday, right? I hope it's not a freaky Friday of trade.
Hopefully not. Last week we had a fantastic Friday.
It was, yeah. But just one thing, right? And I guess we'll get our global guest to weigh in on this as well. This SVB issue may not be a barometer of what's happening in the rest of the banking system, because as Surbhi was also pointing out, SVB is a lender for early stage businesses. Yes. So for a lot of the startups, a lot of the health and technology based startups. And we do know that there is a funding winter that's happened across the world and in our own market. So maybe it is it's restricted to one space. Pocket. But let's see, we have many voices coming through over the course of the next couple of hours to help us wade through these challenging markets. For now, the SGX Nifty definitely is indicating a start that is well in the red. Before we kickstart the show, let me tell you what's lined up in the first half hour. We have updates coming in from the markets across the globe. Richard Harris of Port Shelter Investment Management will be with us to discuss the global trade setup. Later, our research team will be joining in. Lots of stocks in focus this morning. Many updates from corporates as well. More on that at 8:30. We'll do a fundamental stock analysis. Gurmeet Chadda of Complete Circle Consultants will be with us. All right, first up on the equities front, Neelkanth Mishra of Credit Suisse says that financials and IT together form 42% of the benchmark, making their relative weights in portfolios crucial for an outperformance or an underperformance. He says despite a 25% outperformance over the past 15 months, they continue to prefer financials over technology given the upward surprise in global interest rates. High PE sectors should be under pressure, and earnings momentum for financials has been better than that of IT. Within sectors, they prefer stocks trading well below their 10-year average PEs and a lower risk of an EPS cut and continuing EPS upgrades. In financials, he says most banks like HDFC Bank, SBI, Axis Bank and IndusInd Bank fit the criteria. And within IT, Neelkanth says that all are expensive, but they relatively prefer Infosys.
Okay, finding stocks in India that are trading below the 10-year average PE. Probably a big challenge. Let's move to the money market now. We are getting in some views from Bhaskar Panda of HDFC Bank here. He says the US jobless claims number reconfirms tight US jobs market, and the Fed Chair Powell's comments have been taken as US rates to remain higher for longer. He says the dollar index hovers above the 105 level, and oil traded sideways overnight. He adds that USD-INR pair has been trading just below the 82 mark, supported by recent flows. And today, we could see the pair consolidate around the 82 to the dollar pivot and trade in a range of 81.95 to 82.15.
And on the bonds, Bhaskar Panda says the yield curve in India has inverted on the expectation of a rate hike followed by a possible pause. He says the 10-year benchmark bond yield is range-bound and may trade in a range of 7.44 to 7.50%.
Well, we'll also be focusing on a lot of stock-specific action, and we'll get to that in just a bit in our special Top 10 segment. We're looking at Tata Motors, Electra Greentech, JBM Auto, Mahanagar Gas, Natco Pharma, Home First Finance, Krishna Diagnostics, Bank of Baroda, IRB. Well, they are stocks that could be reacting to positive news flow, while the lone stock that could be reacting to negative news flow is Gokuldas Exports.
Okay, well, these are, of course, the stocks that are in focus because of news. But overall, with the markets under pressure, a lot of these pockets like banks could also move to the back burner this morning. That's the big topic at hand, what happened to the banks in the US markets overnight. Richard Harris, the Chief Executive Officer at Port Shelter Investment Management, joins us now. Richard, SVB Financial was the big talking point, right? The stock itself was down 60%. After what the company announced. But as we were just discussing a while back, perhaps it's more restricted to, the startup space, early stage businesses, because SVB is the biggest lender to those businesses. So maybe it's not a barometer of what's happening overall in the economy, but you tell us, what is your view on what transpired overnight? And in general, are you still cautious on risky assets like equities, or are you starting to nibble in a bit?
Well, I think we've got to be very careful exactly what assets we're looking at. SVG obviously is a bank or lending institution that lends to small companies, startups. That's obviously a very risky area. It's proved successful for them because, of course, there's been a lot of liquidity coming out from governments. There's been a lot of demand, then there's been a lot of returns coming from that sector. So it's pretty good up till now, but it is on the risky end of the business, and it is likely to be the kind of bank that's likely to see the stress coming in first of all. We haven't really seen much of a move from interest rates, from the interest rate rise so far in the markets, and it is probably time that we might see some stress in the financial markets and indeed maybe some defaults.
Oh, you're using the D word, Richard. That gets everybody very scared, right? So are you suggesting that this may not be an isolated incident? And I think that was a big fear last night, right? It just brings back those really eerie memories of 2007 and 8.
Well, the financial markets go from 0 to 100 instantly, and you don't really want to be in a bank which has some concern. You want to get your money out before everybody else. On the other hand, there may be very good banks which are extremely solvent that just have a liquidity problem. So I think we've got to remember that the market tends to look on a 0 to 100 basis. But in fact, these things occur on a continuum. So you've got to say SVG is at one end of the continuum, major global banks at the other end of the continuum, which are safe and secure, which are both solvent and liquid. And in the middle, there's a gray area where maybe some companies might default because there is a lack of liquidity around. That's a problem with the credit crunch. Yes, I think we need to start looking at the prospect of a default. All of the indicators are looking at that. But we need to face it because these things are going to become more frequent than they have in the past when high liquidity bailed them all out.
So Richard, just a follow-up question. If this thesis of defaults plays out, it might be in smaller companies, might be in smaller lending institutions. I don't know if it ends up being in private equity. Private equity has fueled a lot of this boom. Then what happens to the equity market? What's your base case scenario? Further downslide, or can the market ignore all of this and continue to move on?
Well, I think, again, you have to put these things into boxes. The private equity market and the equity market are quite different in many ways. In the equity market, moves instantly, it moves rapidly to where it sees the valuations are. Now, clearly, if there's a meltdown in the private equity market, that's going to affect equities overall. But I don't really see that happening. I think that there will be stress in private equity. Many of them have had a great run for the last decade or so. There's been plenty of money. There's been plenty of places to place your money. There have been lots of funds that have been set up. And there's been a lot of unwise investments too, as always happen when times are good. So some of them certainly are going to default down the line. I think what we would hope is that maybe private equity is not going to be as contagious as we might expect with listed equity. And that's partly, as I said a moment ago, because listed equity tends to react much, much quicker. And in many ways is a leading indicator of what might happen in the private equity market rather than something in parallel.
Hi, Richard. Good morning. Richard, suddenly everyone's been talking about the terminal rate heading towards 6%. Are you in that camp? What kind of Fed rate hikes you're working with? And maybe since this banking space suddenly goes into a bit of a tizzy, that could make the Fed a little bit cautious? Maybe slow down on the accelerator?
Well, the Fed has been really slow on the uptake all the way through. I mean, people are now just brushing off the whole thing with transitory inflation. Everybody knew that wasn't the case, at least anybody serious who was looking at the market. They were just playing a line, and they've been slow even before then about increasing interest rates. And the chickens are now coming home to roost. They are going to have to increase. Yes, I am in the camp where we're going to see somewhat higher rates, and we need somewhat higher rates because in Europe, inflation is pretty well double digit. In the US, it's still around 7-8%. In other parts of the world, hasn't quite caught up, or maybe the numbers haven't quite caught up. But inflation's there, and it'll have to be faced.
Okay, all right, Richard, final question then. A lot of our audience will be keen to hear your view on the Indian markets. And you've mentioned in the past preferences towards the Chinese markets, particularly on the valuation argument. How much more do the Indian markets have to correct to turn attention back to the Indian markets? Yeah, go ahead.
Yes, you're right. I mean, I have been focusing on the Chinese market, and unfortunately, it hasn't quite worked as a lot of people had thought. The Chinese market, there's a lot of, I think, more concern there. There's not as much confidence as we expected post-COVID. And if it hasn't really happened now, you have to wonder whether it will. There is a lot of new investment going in India as people are trying to resource. So I think India will be buoyed by that, by people continuing to move sourcing from China to India, but China will still be a very important area. But there will be some underpinning, I think, of the Indian market as a result.
Okay, all right. Well, let's see. For now, at least the markets are holding on to some crucial levels on the downside. Hope that sustains. Richard, thanks a lot for joining in and giving us your quick thoughts. So that is a cautious view coming in on the markets because of what's happening globally. Let's do one thing. Let's take a quick commercial break. On the other side, our entire research team will be joining in to help you prep for the day with our top 10 stocks. Stay with us.
Okay, so it's 1% lower as far as the SGX is concerned. That's the indication that we have. So let's now boil this down to individual stocks that would be in the news this morning. Our research team is standing by with the CNBC-TV18 list of top stocks to watch out for this morning. Good morning to all of you folks. Happy Friday. Sonia, let me start with you. What is this IPO that we are hearing of, a Tata Motors subsidiary?
Well, it's been in the works for a while, and now finally Tata Motors subsidiary Tata Technologies, which is the IT services arm of Tata Motors, has filed the DRHP with SEBI for an IPO. So this is positive for Tata Motors monetization, and this has been the plan in the works for a while. Tata Technology has a fabulous business. It's a very strong company. Its captive clients are Jaguar Land Rover and Tata Motors. So as I said, it's the IT services arm. It's a 74% subsidiary of Tata Motors. In FY22 itself, it saw almost a 50% revenue growth. So very strong business. Now, Tata Technologies plans on selling up to 9.5 crore shares, which is about 23.6% of its paid-up capital. And Motilal, a lot of brokerages have written notes in the past. I'm just stating one of them. Motilal Oswal has ascribed a value of 25 to 47 rupees per share in Tata Motors for its stake in Tata Technologies. So it's a win-win for Tata Motors, and very strong business, by the way, Tata Technologies. So, monetizing of that asset, better for shareholders. I'm expecting the stock to be in the green today.
All right, Sonia, but, you have a couple of other names as well on the back of the Maharashtra budget, and their focus on e-buses. Yesterday, I noticed, I think, a couple of those stocks, JBM Auto and all, they took off as this budget was being announced. Tell us more.
Oh, absolutely. And, I'm looking at two stocks, Olectra Greentech and JBM Auto, right? As you said, the Maharashtra budget has proposed a purchase of electric buses and a conversion of 5,000 diesel buses into LNG run vehicles. Now, this will be, these orders will go to some of these companies like JBM Auto and Olectra Greentech. That is the expectation. So I'm going with green over there. But there are a lot of positives, Nigel, for Olectra Greentech. I chatted with the management yesterday, and they said that they are now the lowest bidder in a tender by CESL for 13,000 electric three-wheelers. So that is another avenue for them. The LOI is yet to be signed for the three-wheeler tender, but they are the lowest bidder. So in all likelihood, they will get that three-wheeler electric vehicle tender, which is an additional positive for them. Now, they're also doing some fundraising. They're doing a QIP of 800 crores within the next 1 to 2 months, out of which 400 crores will be a preferential issue to promoters. They're raising funds for a new plant in Hyderabad, which will be for manufacturing e-trucks and buses. So the demand is so good that they're putting a new plant now. There's greenfield expansion. They've already acquired 150 acres of land in Hyderabad. And this is, according to them, going to be one of the biggest electric manufacturing facilities in India. They're starting with a capacity of 5,000 e-buses, and then they will take it up to 10,000. So lots happening with Olectra Greentech. Just to put it on board, the stock has also had a, a phenomenal rally in the last couple of months.
Okay, got that. And manages to be in the headlines every time of late. 20% yesterday as well. Let's move to Mahanagar Gas, Rima. I think there was a call to explain this mega acquisition that they've done. What were the highlights?
Yes, indeed. So earlier this week, remember, Mahanagar Gas had announced the acquisition of Unison Enviro for 530 crore. Now, yesterday, the management held a call with investors. And here are the key takeaways. The acquired company targets a total volume of 1.1 million MMSCMD in the next 7 to 8 years. This compares with MGL's current volumes of 3.4 million MMSCMD. In the initial terms, remember, this is a small acquisition by way of volumes. So FY24 volumes will just be 0.15 million, while FY25 will be 0.2. CNG is going to be contributing 90% of the total volumes, and the EBITDA is largely similar to MGL's margins. But the street is quite excited about the prospects because it shows aggression on the part of MGL management, and it does boost their volume capabilities far out in the future. Nomura has raised the target price to 1,150. Citi raises it to 1,140. And Nuvama says that this is a potential re-rating event for MGL because MGL trades at a discount to IGL. So they're very bullish. They've got a buy call with a target price of 1,135. So as you can see, the target prices are all above that 1,100 rupee mark for MGL by the various brokerages. Back to you.
All right, thanks a lot for that. So that's on MGL, but I mean, that entire pocket has been in focus. But let's move over to the pharmaceutical space. Lots happening there as well. Ekta is joining in this morning to talk about NATCO. Ekta, what are you picking up?
Thanks for that. Well, yes, NATCO is in focus because Teva came out with a release late last night where they indicated that Teva as well as NATCO will be launching additional dosages of strengths of generic Revlimid, which is basically the blockbuster cancer drug that NATCO had launched or was the first mover in terms of the market. Remember that the market size has come down from that $8 to $9 billion because of competition to around $2.98 billion. So they will be launching 2.5 mg as well as the 20 mg dosages of the generic version. Remember, 4 other strengths were already launched last year in March. Now the companies, all of them have settled in terms of selling certain amount of volumes up till Jan of 2026. So this should be an additional positive for NATCO. It really won't be that significant because the street had anticipated it, but nonetheless, definitely a feather in their cap in terms of launching an additional 2 versions of Revlimid generic.
Okay, all right. Thanks a lot for that, Ekta. Well, let's go across to Vivek. Vivek, a couple of those large trades took place yesterday and you had given us a heads up. Tell us more about it in terms of the buyers and, how do things shape up?
Well, good morning. Well, absolutely right. So 2 stocks yesterday saw very large block deals happen. So first, Gokuldas Exports like we had indicated earlier yesterday morning. So one of the promoter entities, that is Clear Wealth Consultancy Services, sold almost 10% stake in the company. Now they have a residual the 10.2% stake in the company. The buyers list, list of good names, marquee names coming in there. So Aditya Birla Fund, you had Ashoka India Equity Investment coming in there as well, and the Goldman Sachs ex-China Fund too has bought a significant chunk. However, going with a red on this particular name, given the fact that they continue to hold 10% stake, and the outcome of how exactly they will use that particular stake or how they will monetize it is yet to be known. On the other hand, Home First, going with the green on this name, it's a clean-out trade from one of the big investors, Bessemer India Capital Holding. We had alluded to that earlier yesterday as well. And two important names, Fidelity Funds as well as Nomura India Mother Fund, have bought significant chunk in yesterday's block deal.
Okay, got that. Thanks, Vivek, very much for all the details on those big blocks that happened yesterday. Let's move on now. Ekta is joining in. Ekta, why are you watching out for Krishna Diagnostics?
Second time this week that I'm looking at Krishna Diagnostics, and the reason is the same. They've operationalized 100 more pathology collection centers under the BMC contract. Remember that they had won the tender in Jan 23 to provide lab investigation facility services for BMC dispensaries and hospitals in the city of Mumbai. Now, the company had earlier this week indicated that they had operationalized 100 centers, and now an additional 100 pathology centers have been operationalized. So 200 just in the span of this week. The contract is for a total of 600 centers. So I'm sure we'll hear more from the management in the next couple of weeks. But nonetheless, the stock, remember, had gone up significantly on the back of the news on Monday. So maybe we could see some amount of follow-on buying in today's trading session.
Okay, all right, Ekta, thanks for that. Well, let's wind this down then with Mangalam. He's here to tell us about the stocks in the news. Mangalam?
Well, a couple of stocks that I have today. Bank of Baroda likely to be in the green because the board of the company has approved divestment of 49% stake in their wholly owned card subsidiary, BOB Financial Solutions. So let's see how that pans out. The other one I'm watching out for is IRB Infra. A good month of traffic growth for them. Year on year, the traffic growth has come in at around 27%. Collections, that is, although they're down about 6.2% month on month. IRB Invit as well has seen February toll connections of 75.5 crores. This compares with 73.8 crores month on month and 67 crores year on year. So good going for both these stocks as well.
All right, Mangalam, thanks a lot for that. Here's a quick recap. So many stocks in focus this morning. Stocks with positive news flow. There's Tata Motors, Electra Green Tech, JPM Auto, Mahanagar Gas, Natco Pharma, Home First Finance, Krishna Diagnostics, Bank of Baroda and IRB Infra. While the only stock on our radar with negative news flow is Gokuldas Exports. We'll take a short break. Up next, we have Gurmeet Chadda, the managing partner and CIO at Complete Circle Consultants, who join in for a quick fundamental stock analysis. We will also have Lakshmipati Deen Dayalan, who is the chairman and MD at 5-Star Business Finance, to discuss an outlook on their business. Remember, Nuvama initiated coverage on the stock just a while back, a couple of days ago. Stay tuned for more on that. Welcome back to Bazaar Morning Call. Lots of stocks in focus, so let's get straight to it. We have Gurmeet Chadda of Complete Circle Consultants joining in now. Gurmeet, good morning. The big headline on Tata Motors is that finally they've, Tata Technologies has filed the DRHP with SEBI for an IPO. And we do know that it's a very strong franchise and Tata Technologies is a great business. But what, for a Tata Motors shareholder, how would you analyze this?
No, it is positive because they would be offloading almost 20%, and since they own almost 74.4% on it, and it would maybe add something to Tata Motors, also give them the necessary, if I can call that growth capital with the focus they have on EVs and the new launches. And Tata Technology has been a darling for a lot of family offices and ultra HNIs in the grey market, unlisted space. That's on stock which has really done well, other than NSE. And a great business at 3,500 crores, kind of a top line, 450, 500 crore bottom line. So if the valuation is at the lower end more, which is, let's say, 16, 17,000 crore market cap, even that is reasonably priced. So should add maybe 10 odd percent to Tata Motors in terms of an immediate reaction. Well, the way the markets are, you can't be always sure. But I think it's also a good IPO because it's a very niche, specialized play in this engineering, research, and design sector within IT.
Okay, all right. Hi, Gurmeet. Good morning. Gurmeet, Gokul Das, there was a large trade that took place. The PE investor at some point of time was definitely going to exit. Now, they've sold half their stake out there. How do you approach the company from here on?
So, Nigel, there will be some more concern that, while whether the other 10% is also coming or not. But look at it this way. I mean, it's been a great turnaround since Mr. Ganpati took over, post Blackstone exit. It's been like 6x since that has happened. And still stock trades at about 13, 14 times. I'm more keen on who's buying into it. I think there's some good names which have come in. Also, they have a capex now. So in MP, they have unit 1 and 2, which should add maybe 400 odd crores to the bottom line. And then they're getting into NIT projects in Tamil Nadu, which will again add. So they have capex, which will probably add about 1,000 crores in next maybe 2 years to the top line. They maintained EBITDA margin despite, US being the main market and inventories being very high. And the share is pretty low. So I think there are multiple triggers. The valuations are reasonable. Second, once US stabilizes and inventory dries up, you'll have more fresh orders. Then you have this UK, trade deal, if that can happen, where I think this could be one big beneficiary. So I think it's a good play, very reasonable on valuations. But maybe near term, you may not have major new triggers since till the time you see a sustainable turnaround in the US markets, which is 80% for them.
Okay, got that, Gurmeet. Just stay on. We'll quickly get into a corporate conversation and come right back to you. Five-Star Business Finance is the first corporate on our radar today. Nuvama has initiated coverage on the stock with a buy rating and a target of 710. Nuvama is expecting assets under management to grow at a compounding rate of 30% over the next couple of years, right up till FY25, and a pretty high ROA of 8%. Lakshmipathy Deen Dayalan, Chairman and MD at Five-Star Business Finance, is with us. Mr. Deen Dayalan, thanks very much for joining in. So give us some idea about how your business has shaped up in the fourth quarter, because what we saw in the third quarter was that your disbursements were growing pretty well year on year and quarter on quarter. But I think there was something with the new RBI rules in terms of NPA recognition, which is why sequentially your NPAs were also rising. Are these trends still continuing in the fourth quarter? How is it different?
Yeah, thank you for having Five-Star here. I think fourth quarter, two full months have gone. I think it shows very strong business growth, both in disbursement and logins. We are seeing one of the best quarters. The outcome, I think March quarter will be the best among the best of Five-Star. So we'll wait for the quarter to end, but the guidance will be one of the best quarters for Five-Star. On the RBI regulation, yes, from October 1st onwards, the new RBI circular which got kicked in, which differentiates the 90 plus and technical NPA, or the terminology of NPA is just changed. From a 90 plus perspective, we are at 1.16% in December, and from RBI technical NPA, we are at 1.45%. There is a divergence, a dichotomy of close to 0.29% between 90 plus and NPA, which I think is one among the lowest in the market when we switch over from 90 plus to NPA, new terminology. I think that will continue, but the guidance what we have given to the market is the 90 plus and NPA, the difference will be 0.75 to 100 bips. That's the guidance what we are saying. I think it will be well below that guidance as we move towards.
Okay, all right. Good morning, sir. Thanks so much for joining in. Well, let's get a couple of numbers since we're a little bit short on time. AUM growth, Nuvama, they are factoring in close to around 30% growth for the next few years. Is that gettable?
For sure, it is doable. I think that's where we strongly say.
All right. So we've got that out of the way. What about return ratios? They are working with the ROAs of close to around 8% and ROEs at around 17% in the next couple of years. You can get both those ratios as well?
No, I think there will be some drop in ROA because the leverage will start kicking in. I think in last show also I clearly said the game plan for Five-Star is moving from ROA to ROE, return to shareholders. That will move from current 15% to the numbers what you mentioned. But there'll be a drop in ROA. Our steady state guidance, what we give to the market is around 6% ROA in steady state in next short and medium term.
Okay, so there'll be a drop in the ROA and the steady state will be 6%. Now, you know, the one thing that the street likes and what Novama also mentions in its report is that the low gross NPAs is something that's very comforting up until now. But given that we have higher interest rates, given that, you know, consumers' pockets are getting pinched because of inflation, do you at some point see a rise in loan defaults, in repayments? And do you think that could put pressure on the asset quality in the near to medium term?
So as I speak today, I don't see any inflation pressure or a rising interest rate scenario to my set of customers. I am talking on behalf of Five-Star customers who lend to single and small shopkeepers and self-employed of this country, where without them, any common man's day-to-day activity cannot be run through. So they're in very high demand. I don't think this inflation and rate hike is going to dent them in a big way. Having said that, even in last show, I explained Five-Star is positioned in a very, very sweet spot when a liability franchise position. So our pricing is coming down. We were borrowing close to 11, 12%, 24 months down the line. Now we are borrowing at 9%. And cost of fund in our book is around 10.25 to 10.35 in December quarter. So if my incremental borrowing, say even there is a 50 bips hike from RBI, my borrowing will go near to 9.5 to 9.75. So technically, the book cost of fund is going to only drop. So I don't think Five-Star will raise any interest in next few quarters if the same trend is going to continue.
So will you be able to control your credit costs to under 1%? Because, you know, that is the expectation. Can you give us a guidance of what it could look like in FY24?
The guidance what we give is our credit cost will be in somewhere between 1 to 1.25, taking the ECL provision into consideration, because we are very conservative in provision. We carry close to 1.5 to 1.6% of the entire book as a provision. So I think keeping that in mind, my guidance on provision will be around 1 to 1.25.
Got it. And your NIMs, I just missed that number. What is the, you know, keeping in mind the cost of borrowing and how much you're going to increase rates as well, what should be the number you're working with?
My spreads will be close to 12% in a steady state, and my NIMs will be close to 13-14% in steady state.
Okay. All right. We'll leave it on that note, Mr. Deen Dayalan. Thank you very much for joining in. Well, while we were in that conversation, China has gone ahead and selected Mr. Xi Jinping as the president for a third consecutive term. It's been a absolutely stellar rise and complete holdover power that we have seen play out in China, with, of course, term limits on the top office getting abolished in 2018. Of course, largely on expected lines. Nothing unusual for the market, but nonetheless, pretty historic move coming through. Markets, anyway, they have other issues to deal with, and they generate out of Wall Street. So the Hong Kong market's down about 2% as we speak. Gurmeet is still with us. Gurmeet, thanks for staying on patiently. I don't know if you look at the company that we were just talking to, but otherwise my question to you was more for Bank of Baroda. Your thoughts? I mean, there's a corporate development happening with them looking to sell stake in their cards subsidiary, and everyone's looking at the cards business quite carefully after the Axis deal, right? But you tell us, in terms of the stock, any thoughts on BOB?
So, one of the PSU banks, we are constructive on. Obviously, we like SBI more relatively. But if you see BOB, last quarter was very good. PPOP was almost 50% up. In fact, I've not seen 1% NPA in Bank of Baroda for a long time. Also, the credit cost and slippages, if I remember correctly, slippages are hardly about 3,000 crores. Good amount of provisioning done and commands a very, very reasonable valuation if you look at the PSL. But that's the case with PSU banks. You see sharp rises and any negative event in the market, anything to do with any negative event on credit side, you see a bit of a derating. So I think you got to be tactical here. We saw a rise in PSU banks towards the end of the last year, and then we saw 20% plus kind of a fall when the Adani issue and other things surfaced. So tactically, maybe you can look at it, but fundamentally, I think more comfortable with SBI. Surbi.
Okay, Gurmeet, I wanted your thoughts on Electra Green Tech. There's so much happening there, and it's orders galore for the company, it seems. But this is a stock that has also destroyed a lot of wealth, right, in the last 1 to 2 years. So now that recovery is playing through, how are you feeling about the stock at this price?
Sonia, I have a view that a lot of this EV space looks overhyped, both in the unlisted and listed space. And the actual impact which will come because of the news flows we have seen, there was Maharashtra budget yesterday. We saw, good rise in even JBM Auto. I think some of it gets into the price pretty quickly. And Electra Green Tech right now is almost 100 times earnings. This is not a market to, play future hope stories, if I can say that. I think you're getting 5.5% in US Treasuries less than 1 year. You're getting 8% almost now on fixed income. So you have to be more patient, I think, in this space. There are better opportunities. As I said, we discussed Tata Motors. I think M&M is better. And there are some other places which I think are better placed right now.
Okay, all right. Gurmeet, request you to stay with us. For the time, we will slip into a short break. Up next, Mitesh Thakkar as well as Shrikant Chauhan will be joining in to give us some technical tips. Stay with us.
Welcome back. The mood's a little somber this Friday. That's the SGX telling you that we'll probably start on the lower side, about a 1% drop after a 1% slide yesterday. Blame it on weak global cues. Let's take it to our technical experts to see how you can negotiate this morning. Mitesh Thakkar and Shrikant Chauhan join in for exactly that today. Gentlemen, good morning to you. Mitesh, let me come to you first. Now, how do you look at this? I mean, how do you approach the market considering we're getting this gap down in all probability? At some point, would you look into buy or would you look at selling the rallies?
Good morning, Survi. I think, till yesterday we had a positive outlook and we were looking at any declines to about levels of 17,650 as a buying zone, the stop just below 17,600. I think that was triggered, and also that fall which happened yesterday late afternoon kind of, disturbed the hourly and the 2 hourly charts. So one, I'm not immediately wanting to buy this decline or a 130, 140 point kind of a gap down. The key supports for me are now closer to about 17,400. So maybe, post that, if we see some follow through and then we see support coming in closer to about 17,400, 430 zones, then maybe venture out for a long position. But otherwise, I think this could be a situation when the uptrend has been violated. We still don't have very confirmed signals of a downtrend starting. So it could be a market which will be choppy with some mild negative bias.
Okay, all right. Mild negative bias is what you're saying. Shrikant Chauhan of Kotak Securities is also joining in. Shrikant, it doesn't look like it's going to be a mild, at least at the start of trade. But your thoughts on whether we could sort of emerge unscathed by the end, and what are the stocks that you're looking at today?
Yeah, good morning, Sonia. Good morning, Surbi. I think, the markets are very clearly in the range. They are not crossing the levels of 17,800. And also, it is finding difficulties somewhere close to 17,400 to sustain. I mean to say to fall and sustain. So somewhere close to 17,450, 17,475. We should be buyer in the market with a contra view. The other reason is that the 200-day simple moving average is also very close to 17,425, 430 levels. So if we see the market is dropping to those levels, then there we should look for some contra bets in the market with a stop loss at 17,350 on the downside. We are again expecting market to rebound from these levels. We are not expecting market to cross all the levels, but yes, we may see the levels of 17,600 during the day. And for the bank Nifty, the important level is 40,700 or 750.
All right, a contra trade coming in there. And good morning, Shrikant. Tell us, what are your picks for today?
Yeah, I think, then Nigel, I think we should look for adding those companies which are relatively better, like Tata Steel, Steel Authority, or maybe some steel stocks. They are doing really well. They are recovering from their important support levels, and the volume and delivery-based volumes are increasing on a day-to-day basis. In that space, we like Tata Steel, which is currently trading at 108 to 108.50. There we are expecting stock to move towards 115, 114 in the near term. And today, if we see any lower opening, then I think it will be an opportunity for short-term traders to create long positions with a stop loss at 104. And the other stock on which we are bearish, it's Persistent System. From all the way its lower levels, it reached to its previous high. And it is now forming some negative formation. I'm going to say there is a negative divergence on the stock. I think from here, the stock can easily fall to the levels of 4,600. Currently, it is at 4,800. I think we should look for creating short positions with a stop loss at 4,850.
Okay, got that, Shrikant. Thanks for the picks. Mitesh, your stocks for the day?
So I have more of sell calls today compared to the long side trades. I have a sell on a couple of auto names. Maruti is on the list with a stop at about 8,605 or just above it. Look for declines to about levels of 84.50 here. Escorts have turned negative also in the short-term charts, so I think that could be sold for a target of around 1910, and I would recommend a stop at 1991 here. And a sell on Godrej Consumer, wherein a target of 880 can be looked at, and a stop loss at 913 or just above it could be placed. One buy call, that's SBI Cards. A good candlestick pattern yesterday, a good setup of good set of indicators there. If it starts getting past yesterday's high of 772, it's close 4 or 5 rupees below that. Then buy with a stop at 760 for targets of 795.
All right. Thanks a lot, folks, for that. We'll keep coming back to you for more. But in the meantime, let's take a short break. We'll have the pre-opening rates kicking in. We'll also have Rakesh Arora of GoIndiaStocks.com to talk about the metal sector outlook. Do stay tuned in for that.